On today's episode, we are going to take a look at more growth stocks. Right now, I'm currently in search of more growth stocks to add to my portfolio. So today's episode is going to be pretty similar to one of the episodes I did a few days ago, and I got a lot of positive response from that episode. A lot of people were saying it was adding value to them, so I decided to do a similar style episode today. So on today's episode, I want to like I said, I'm currently looking for growth stocks. And right now, there is a very popular investment firm that has multiple ETFs, and that's ARK Investment. On last week's, I want to say not even last week, a few days ago, I did an episode where I took a look at the total position of ARKK, which is ARK Investment's main ETF, but they also have different types of subsection ETFs. Today, I'm going to take a look at ARKW, that's ARKW, and this is their next generation of internet funds. And usually you'll find here a lot of companies that deal with the future of the internet. So similar to last week's episode, I'm going to take a look at every single position here. Obviously, we're not going to go through all of them here, but I went through all their positions, and here I gave them a score very similar to how I did in the last episode, where we're going to take a look. I gave them a point based on their expected revenue growth for the next 3 years and the expected profitability for these companies for the upcoming years. So today's episode is going to be broken down into the following three. First, we're just going to start off for anybody who missed the last episode. I'm going to talk really quick about how I did the point system. After the point system, I'm going to take a look at the top 10 scorers of the point system. And after that, I'm going to take a look at what I find to be the most interested companies out of them and talk about them. And like always, if you are new to my channel, if you are a long-term investor, and if you like to learn about growth stocks, make sure to hit the subscribe button and the thumbs up. And to all my returning viewers, thank you so much for all the support. It truly means a lot for me. Like always, if you guys want to get in contact with me, feel free to post on the YouTube comments. Feel free to find me on Twitter. I do have a Discord channel which is free to everybody, and I also have I would say a weekly newsletter. Maybe sometimes it might be a bit late, and I am gonna post this Excel sheet on that newsletter, and I promise it will be out today. I am a little late on that one. Remember, all of this is my opinion. None of this should be taken as advice because I am by no means a professional. So make sure to talk to a financial advisor before making any investment decisions. All right, so first let's start off with the way I ended up doing the point system. So if you guys don't know, you can actually go to ARK Investment's website and you can pull out their daily holdings of the positions. Unfortunately, I did it a bit early today. I was able to get their holdings from Friday, but later on in this episode, we're going to take a look at some of the positions they opened up or added into. Overall, their positions don't really change too much. It's more just a percentage weight. So like I mentioned, you can pull this out of there. What you can't pull out from there is these scores that I ended up giving it. So here you can see, let me zoom in just in case you guys want to see better. I have three new sections: high growth, profitable, and total score. So high growth, each of these can only get a score between 0 to 2, 0, 1, or 2. So high growth, you get a score of 0 if your expected revenue growth for the next 3 years on average is somewhere between 0 to 10%, right? I'm not here looking for a company that's expected to grow revenue super slow. You get 1 point if it's expected to grow between 10 to 20% on annually for the next 3 years on average. So that's a decent grower. And you get 2 points if it's growing more than 20% annually on average for the next 3 years. And that's what we consider a true growth stock. So that's where we get 0 to 2 points. Then we're going to take a look at profitable. Is it profitable? You get 0 points if the company is not profitable right now or is not expected to be profitable within the next 3 years. So this has taken me a lot of time, guys, and trying to do this will take you guys hours and hours. So I'm hoping to be providing value to you guys. So profitability, like I mentioned, you get 0 points if you are not profitable right now or you are expected to remain unprofitable for the next 3 years. Next, you get 1 point on profitability if you are profitable right now, or you are expected to be profitable within the next 3 years. And then you get 2 points if you are already profitable and your profitability is growing, your earnings per share is growing faster than the market or the industry, and that gives you 2 points. Right now, the perfect score would obviously be a 4, and the worst score will be a 0. So in today's episode, now that you guys know how I did the scores, let's take a look at the top 10 winners. So over here, like I mentioned, you can I did this all in Excel. So once you guys open it up, you can see it. You guys can play around it really quick. Another thing I did for you guys is I wanted to take a look at what sector they're in. For example, for me, there's certain sectors that I'm not too bullish on, so I wouldn't invest in them. And this helps me make sure that I am following a stock that is in a sector I'm bullish on. And another thing that is new in here is I put this chart if this company is in the previous video. So like I mentioned, the previous video, I took a look at ARKK, and that's their main ETF. That has a little bit of a mixture of everything, of all the other ETFs that they have. That one's like the perfect blend of them. This one's more of the future innovation in the internet. So you're going to see some companies here that were not in the overall ETF. And so you guys can know, I ended up putting a yes if they were in the previous video. Obviously, we can see there's a lot of them that were not here. Even some of the top 10 scorers were not here. So that's pretty interesting, to say the least. All right, so now let's take a look at the top scorers. And the first one coming off the bat should be no surprise to anybody. And let me just say this, I am by no means a Tesla bull. I am by no means a Tesla bear. I do not have a position on Tesla, but it is pretty impressive that they get a perfect score of 4. So that means they are expected to grow their revenue at over 20% annually on average for the next 3 years. And they are profitable right now and are expected to grow their profitability faster than the market or the industry. And we can see this is actually their #1 holding. It's also their #1 holding in RKK. ARK Investment is probably one of the most bullish firms on Tesla at the moment. And many people might have, what's her name? Kathy Woods is one of the biggest advocates for Tesla and the overall business. So Tesla makes the #1 of the top score. The second one is one that was not in the last episode, and this is Trade Desk. So Trade Desk, this is ticker TTD, and Trade Desk is pretty much in the advertisement business. I have done a video on Trade Desk, and they also get a perfect score of 4. So again, that means they're growing their revenue for the next 3 years on average over 20%. So we can see Trade Desk is a very strong grower, and it's already profitable, and it's expected to be it's expected to grow its profitability faster than the market. So we got a position of 4. Unfortunately, Trade Desk is one that is not too much of a huge position for ARK Investment. It only owns about 1.19% of their portfolio. But I like I mentioned, later on we are going to take a look at some of the companies they bought today. They sent out the email earlier this afternoon, and Trade Desk is one of them that they did purchase. All right, so that's it for those that make it in the perfect score. I think in my last video there was only Tesla that made it into the perfect score. In this one we can see Trade Desk is one, and this is one that I'm gonna keep my eye on and maybe see if I can do more of a in-depth analysis on it. The next one we're going to take a look at is Square. Square comes in with 3 points. There are 3 points coming, and this is ticker SQ. 1 point in high growth, so that means the revenue is expected to grow in the next 3 years for between 10 to 20%. So it's still a decent grower, right? Growing 10 to 20% is not an easy task, especially with the type of market Square is in, right? One of their biggest ways that they collect revenue right now is through other small businesses. So right now with the overall COVID-19 happening, I can see how right now it might be a slowdown in their growth of revenue. But hopefully when things pick up, that growth can speed up as well. They do get 2 points in profitability, so that means they are already profitable, and they are expected to become to grow their profits faster than the market and the overall industry. We can see Arkw holds a big portion of Square. They own about 8.09%. I do believe we're gonna they might have sold out a little position today, but I don't take that much of a bullet as a bearish scenario. Square, like I don't know if you guys follow ARK Investment, but they are very active with their investments. They trade in and trade out almost on a daily basis. The only thing is when you see a big position like 8.09%, it's very rare for them. It does happen, but it's very rare for them to sell out a whole position like that. Usually they sell a few percentage here and there, like 0.5%. I think at most I've ever seen is a 1% sale within the past four weeks. But again, that can change. But normally they don't switch big holdings too much. Fintech, Square is one that I think is pretty cool. Next one we have Roku, and this is ticker ROCKU. They get 3 points here, and the opposite of Square, they get 2 points in high growth, so they are expected to grow their profits at over 20% for the next 3 years on average annually. And Roku is in the streaming business, so we can see a lot of people right now, a lot of cord cutting happening, a lot of people trying, right? The best thing about Roku is it doesn't matter who is the streaming leader. It doesn't matter if Netflix, it doesn't matter if Disney Plus, it doesn't matter if Hulu. Roku works with all of them, so they are just like the perfect hub for whoever is the winner. So Roku it looks like will continue to be a winner no matter who wins this streaming war. They only get 1 point in profitability, which means they are either profitable right now or are expected to become profitable within the next three years. Next, we're coming in with Huya. Huya did take a big beating today. I think Huya is down over 8% for the day. Huya is one of my number one holders. It is my number one position in my portfolio, so that did hurt a little bit. But if you guys don't know Huya, Huya is a Chinese company that has that is in the esports business. They do the streaming, very similar to Twitch, very similar to YouTube gaming, very similar to Facebook gaming. The only ones, they are one of the few that are allowed in China. Another one is Doju, and there were some big news today that maybe I might cover on later on this week. Is Tencent is one of also a position here. Tencent is one of this big firm in China, owns major positions in Huya. Before this news, they own over 30% of Huya, and they own 30% of Doju, which is their competitor. And today, Tencent actually announced that they were going to buy the majority shares of Huya from Joy. So they want to merge both Huya and Doju to become one super streaming platform. Not sure why the market is a little bearish with this. I thought that was a very bullish case, but it is down today. Unfortunately, it is my number one position. So when my number one position, I'm not going to continue to add here. And I've been added, and this is one of my still biggest winners right now. Next, we're going to take a look at Lending Tree. Lending Tree comes in at number 7. I want to say, yeah, number 7. And this is ticker TREEUW. They are in the fintech, and they also get 3 points. They get 1 point in revenue growth, so that means they're only growing over 10%, but less than 20%. That's still a pretty crazy growth. I don't know. They are in fintech. Okay. Then they get 2 points in profitability, which means they are profitable, and they are expected to grow their earnings per share faster than the overall market. And I think that's it for the top 10 that made it in, that were in the previous episode. There are some the next 3 companies were not in last week's episode. And the first one we're going to take a look at is Amazon. And Amazon is owned, they have about 3% of their portfolio on Amazon. And honestly, I am a little bit surprised that I did not see Amazon in their ARK, in their main ETF. But Amazon comes in with 3 points. They come in with 1 point in high growth, and this to me was pretty interesting. But when you're such a leader in this market, right, for you to grow even 20%, it will be a hard feature. So they get 1 point in high growth, which means they're only expected to grow their revenue for between 10 to 20% annually for the next 3 years on average. Again, this is one of the biggest sellers right now. So even growing 10%, it is pretty impressive. They get 2 points in profitable. So that means they are profitable now, and they are expected to grow faster their earnings per share than the overall market. And if you guys for some reason don't know who Amazon is, they are in the e-commerce business, one sector that I am very bullish on. Coming in at number 9 is another one of my favorites. This is C Limited. C is a Singapore company, and I have done a video on them. I in my video I called them the next Amazon. C is one that I am very, very bullish on. But again, it's one that's very, very volatile. It is in the e-commerce market, but they're also in the esports market, and they're also in the e-payment market. So they are in 3 markets that I am very, very bullish on. They come in with 3 points. The first 2 come from high growth, so they are expected to grow their revenues over 20% for the next 3 years on average. And they also come in with 1 point in profitable, which means they are either profitable now or are expected to be profitable within the next year. After C, that number 10 comes in with Tencent. Tencent is techie. Techie is one of my favorite. After Huya is I want to say my second favorite Chinese company right now. Ticker TCEHY. Unfortunately, I think they are over the counter. I'm not 100% sure. So not every single broker might be able to purchase this stock. But this one is, to me, the perfect way to explain it is they are like the Berkshire of China, kind of. They own big portions of different companies. So for example, I mentioned they now own over 60% of Huya. They own over 30% of Doju. They own, I think, about 33% of C Limited, somewhere around there. They own a lot of the big gaming companies. They own, I think, the creators of League of Legends. They own 50% of Epic Games, the creators of Fortnite. So they own a lot of different e-gaming companies, and they also own a lot of other companies as well. But my main focus on them is the esports and the e-gaming industry. And I do want to talk about another one that I do see here that it's their number 11, but might as well talk about it. It's Meli, Mercado Libre, and I think this is an Argentina stock. It is an e-commerce, and I think they reported earnings today. They get 3 points. They get 2 points in high growth, which means they are expected to grow their growth at over 2%, at over 20% for the next year, for them within the next 3 years annually. And they're also expected to be profitable, or are profitable. They get 1 point profitability. So they are either profitable now or are expected to become profitable within the next 3 years. So that's Meli for you guys. And I don't know if I did Tencent. Tencent got 3 points as well. 1 for high growth, so that means 10% growth or higher, but below 20% for the next 3 years on average annually. And they get 2 points in profitable, so they are profitable now and are expected to be to grow their earnings faster than the market. All right, and like I mentioned, there are a lot of other positions. The only other ones that made 3 points right now, I'm just going to talk about them real quick, is Teladoc, and we all know TDOC, ticker TDOC. They are in the news right now with that big merger. They are in the e-health. The next one coming in is Alterax, and I actually just did a video on them where I did a full analysis, and that's ticker AYX. And for those that watched that video, we're gonna see that today Arkw even increased their position on AYX. So it's always bullish to see something like that when a big firm like this does something that I also did. So it's just a little, right? It helps out a little bit, right? This investing world is pretty lonely. So it's good to share the winners with other companies. And the only other one that came in with 3 points was Lending Club, and that is ticker LC. And that is also in the finance, very similar to Lending Tree, and very similar. Was that the only one that was there? Yeah, very similar to Lending Tree. All right, so now let's actually take a look at some of the purchases they made today, so we can really see them. All right, so here, if you guys ever want, this is not information. This is information that's given to anybody that wants to find it. And they give you every day. They tell you what positions they bought, what positions they sold. And today we are gonna take a look at ARKW. But here, I'm gonna zoom in for you guys so you guys can see. I think Workhorse reported earnings either today or tomorrow, and it does seem like they did increase their position on Workhorse by over 46,000 shares. But let's take a look at the company we're taking a look at today at the ETF, and that's ARKW. So here we can see in our ARKW, They ended up buying about 44,000 of shares of AYX. They ended up buying more Lendy Club. They ended up buying more C as well. There was a big red market today, so it did seem like they did take the opportunity to buy a lot of shares. Unfortunately, they sold some position in Square and they sold some position in Techie. They did buy more Teladoc and they did buy more Trading Desk as well. We saw Trading Desk was that top leader. It did a perfect score, very similar to Tesla. And the only other one they sold was Weekday, which was Workday. But we can see it was a very small position that they ended up selling. And like I mentioned, these are all informations that you guys can get from their website. You can just go to arkinvestment.com and they give you a trade notification. All right, so now that we took a look at their top 10 holdings based on the score I gave, and I think we took a look at their top 13, to be honest. And we took a look at some of the purchase. I just want to do a quick overview of some of the ones that I found are pretty interesting. And maybe they might not make it on the top list. Most of them actually do. But there's one that doesn't. And these are companies that if I haven't done a video on them, I am going to work on learning more about them. Because I'm hearing a lot of great things about them. And seeing them being in the top scores right here kind of continues to give me that, yes, they are companies you should take a look at. So the first one is Trade Desk. Trade Desk comes in with a perfect score of 4. So this is one I'm definitely going to keep my eyes on, especially with the advertisement business right now. I have to take a look. I know advertisement has taken a hit. I wonder if Trade Desk has taken a hit with it in base of stock price. The next one I really like to me is C Limited, and this is ticker SE. This is one I am very bullish on because it is in the esports, it is in the e-gaming, and it is in the e-payments. One that I don't have a position in and I'm very interested in as well is Meli, Mercado Libre. This is in the e-commerce in, I believe it's in Argentina, correct me guys if I'm wrong there. And this one came in with a nice score of 3. So a nice score of 3, we can see this is a high growth and it's expected to be profitable. And for me as an investor, that's what I'm looking for. I'm looking for one. The first thing I'm looking for is, are they in the market that I feel bullish on? They are in the e-commerce, which is a market I am very bullish on. Second, are they growing at fast rates? I want to grow. I want a company that's continuing to grow. I'm not much of an investor of a very slow grower companies because what's the point of me investing in a company that's growing slow? So it does, right? It gets 2 points in high growth and it means it is growing faster than 20%, which is considered a very strong grower. And third, I want to make sure this company becomes profitable soon or is at least profitable right now. I'm not going to invest in a company that is not expected to make money anytime soon. So Mercado Libre is one I'm very interested in doing an episode on. And let me know which one here do you guys, if any, do you guys want me to do an episode in? Alteryx, I actually just did this past weekend. I did a full depth analysis on Alteryx, AYX. So if you guys want to learn more about that, definitely check out that episode. I'm really liking the position, but it's not, like I said, I don't know if you guys watched the position. Alteryx will never be one of my top 10 holdings, that's for sure. But it's one I am bullish on, and I am very happy that Arkw did increase their position in here, which gives a nice bullish case for those that are holding right now. And finally, my last favorite one from here is TWOU. And TWOU is one I also mentioned in the previous episode. And this one is in the online educational business. And it's a market I do expect to grow within the future. But unfortunately, analysts do not see that same conviction. In high growth, I only gave them a point of 1, so that means they're only growing between 10 to 20%. So it's not a fast grower like I want it to be, and it's also not expected to be profitable within the next 3 years. So it's a company that does not hit all my checklists. It barely hits my checklist. It's a decent grower, but it's not a strong grower. But what it does hit, it is in the market that I am very bullish on, that online education. So like always, guys, I hope you guys enjoyed today's episode. Let me know, what are some of your favorite, are some of your favorites in here, ones I did not mention? And like I mentioned, I will post this on my website and send it on the weekly newsletter today. If you guys want it, make sure to subscribe to that weekly newsletter. Just go to josenajaro.com and you can get all the information on the pinned description or on the description of the video. So like always guys, take care, have a good night, and see you next time.